Hello and welcome to our web chat on eBAM, the way forward, developing effective internal and external processes and controls. Today we have Dan Gill, who's worked in corporate treasury for many years, focusing exclusively on helping corporates effectively manage their bank account and bank fees. He's an industry expert and is well known across the industry. He's helped many Fortune 1000 corporations, primarily in the US, monitor and reduce their banking fees. And he's also an expert in the emerging new Swift eBAM message set. And we're going to be discussing three aspects of eBAM. The first one is managing bank account risk. Dan, this is a problem that not only corporates have, but banks have as well, managing the full inventory. What's your take on this?
Sure. I think a lot of times when we think about this chore, this task of managing our inventory of bank accounts that we have in Treasury, that we tend to think of it more from an efficiency framework than we do anything else. And I like to advocate that we look at it from a risk perspective. And we look, for instance, at the fact that every bank account that the company has is a potential point of risk. So we need companies need to think through a thought process of how do I minimize or mitigate those risks that I face. We need to take more of a risk approach to how we look at the bank accounts that we have. Time and time again, you'll talk to a corporation and they'll have an auditor come in only to find out that there are bank accounts open at their banks that they didn't know were still open or never knew got open. Or that they thought had been closed for some time. So what we need to do is take a look here where we're talking about what internal controls can we put around things like onboarding and offboarding of bank accounts so that we can make sure that those accounts that are so important controlled and we reduce fraud and compliant risk.
Does that include the inevitable problem of trying to limit the bank accounts and stop people opening new ones?
Well, sure. I think much of the reason why companies have problems with this today is we've gotten a lot of decentralized sort of treasury operations where folks who are not necessarily treasury people are out in the field opening bank accounts on behalf of the company, which means treasury may not even know the account exists, and they certainly don't have all of the knowledge or control over what services have been purchased on those accounts. So it makes it more expensive and it makes it riskier to the company.
Banks have problems though with bank accounts. They need to manage the bank accounts and the income, don't they?
Absolutely. Absolutely. The inventory of these accounts is important, just knowing what you have. But the second thing, aside from the fact that everyone provides a conduit of risk, if you will, the second part to that is that every one of them represents a cost to the company. Even if you don't run any transactions through the bank account, it is still a cost factor to the company. If we think about where banks are globally with their need to increase revenue streams, well, the corporate bank account is a great place to focus on for them to increase their revenue. And so as a treasury representative, we need to make sure we're watching our expenses on those accounts. But it's hard to do because there's just an overwhelming amount of data that comes in. The costs are frequently changing. The services that banks offer are changing. And at the end of the day, it is nearly impossible for us to even get a complete global picture of what we do spend on the bank accounts in our whole operation.
So clearly there's a need for a central system. Are there any lessons there?
Well, I think a centralized system is important that is managed by Treasury. Now, obviously, I tend to think in the big corporate space, for a smaller company, it may not take a centralized system, but in the big corporate space, where you're dealing with multiple banking relationships and more than 50 bank accounts, you need to have some system that is responsible for tracking the inventory of accounts, tracking the costs associated with those accounts, and then tracking the people within the organization who have some authority over those accounts. Mandate holders has become the popular term for referring to them.
Does that have to be as part of the treasury management system, or are there systems that make sense that are independent, separate?
I think it depends on the size and complexity of the organization. So many of the treasury management systems have a capability built into them to do the basic task of keeping track of the inventory of bank accounts, and then tracking those mandate holders that have some authority over those accounts. So you'll find it in treasury management systems, and for a company in manufacturing, for instance, that at the end of the day can have a fairly basic set of bank accounts to run that business, they could probably get by with that. When we move into some of the more complex financial industries, insurance, for instance, or the financial types of companies, they'll often need more detailed controls over that, simply because of the number of accounts they're dealing with, the amount of transactions that go through those accounts, and the number of people. And those really are the three factors that I think you have to evaluate.
You make an important point that in the bottom right of this screen, that the information needs to be quickly and accurately updated, and preferably by your bank. Is that a wish, or is that possible?
Well, I think it goes back to one of the first things that I was thinking on this, is when we tend to look at the problem of eBAM, we tend to think of it as a question of efficiency. I think of it as one of controls and compliance. So at the end of the day, the point of this slide is that I can establish a bunch of very solid controls internally around my bank accounts and the people that have authority over those bank accounts. But if those changes, if the information I have does not match the records that the banks have, my controls are really irrelevant. Because at the end of the day, if the bank doesn't agree that this account is open or closed, and I say it is, well, it is actually open at the bank. So what I need to have is a way to take the changes and the updates and the opens and closes of bank accounts and make sure that when I request that change, that the bank actually updates their records. I think of it as a synchronization problem, keeping my data in sync with what the bank is doing.
So that really naturally leads us to eBAM, the realities. But the first problem with eBAM is, what does it mean? It means so many different things to different people. What do you believe should be the meaning of eBAM?
I think that's exactly right. I think part of the biggest challenge, if you will, in this term eBAM, or electronic bank account management, right? Bank account management, we've been passing signer cards between corporates and banks for decades. The idea of eBAM at its core is using an electronic method to communicate this to our banks. Now that seems similar or simple enough. The problem is if you ask multiple banks, if you even ask multiple treasurers, the definition of that term becomes very problematic. In some cases, if you ask a bank, what is eBAM, they're going to talk to you about a website they have where their customers can log on to their site and manage their bank accounts at that bank. And that's a great solution if that's your only bank.
So what do you think we should call it?
Well, I tend to tack on the term Swift eBAM. So to make all of this work, two things are necessary: a common language or a way of communicating this, and then a transport mechanism for those messages. And so when I talk about it, I am specifically referring to Swift's model of eBAM, which is a specific ISO 20022 message set that can do different things, communicated via the Swift File Act network to get the messages back and forth.
So if we move to this Swift eBAM definition, you've listed the things in the top right-hand corner, what you can do with eBAM.
Right.
But that depends on whether the bank can accept the messages and so on. How do you, as a consultant, go about managing the relationship between the bank and the corporate?
Right, and that's a great question, because at the end of the day, it takes both sides. So I think there's a couple of important points of how you manage the relationship. First and foremost is by using Swift eBAM, we're insisting, in effect, on the ISO 20022 standard. Right? If we can't all speak the same language, we're going to have a hard time doing it. And we're also using a network that most of the banks are already connected to.
The problem is, though, that the big banks, the global multinationals, are developing their own systems and are preferring individual corporates to go direct into their individual systems, the bank's own systems, rather than use the eBAM messaging, because it's so uncommon. How do you make it real? How do you get towards this common language?
Yeah, I think it will follow ISO 20022 as a whole. I understand a large bank's desire to have their dedicated channel into them. That makes some business sense. It makes business sense, at least to them, and it probably makes business sense to a large number of their clients. However, their largest clients, if you extrapolate that out to having 20 different banks, they would have to have 20 different portals to manage the accounts at each of their individual banks, and that would become unmanageable very quickly. At the end of the day, they need to be able to have a central repository in Treasury that can then go out to many banks rather than having many banks that they have to manage this individually at. I think there's going to be a bit of a showdown between the large corporate space and the banks in the coming months, and that's going to be a key factor to eBAM continuing as this model.
That's a very interesting thought, that it's a showdown in the next few months.
Months, years, perhaps, but we've all underestimated how long this is going to take. That's for sure.
That's for sure. So the real task is managing your banking wallet, not just your cost efficiency, but also your relationship with the banks. So the first question is, how much do I spend on my global banking operation? Now, that's not easy to answer, is it?
It's very difficult to answer. And it goes to the treasury mindset. Often we want to get about the business of, communicating with our banks with eBAM or controlling fees. And so we start looking at the details early on. When we fail to realize that unless I know how much it costs me to bank around the world, I'm really not yet in a position to start developing where should I try to find savings and things like that. So it goes back to the same thing. I need to first and foremost have good communication with all of my banks so that I know what I'm spending around the world and all of my bank accounts.
What's your experience with the banks actually adopting the BSB standards, the ANSI standards in the States? Is there a consistent pattern coming out here?
It is. I think there's some encouraging news. I've been doing this a long time, and I was around for some of the early days of what we call the 822 in the U.S. Today, you can get that ANSI standard from just about any bank that offers corporate services, far easier in the U.S. The BSB is growing just like that did, slow in the start, much like eBAM is. It is now an ISO 20022 standard that will be updated and follow all of those rules as well. And I think getting those standards, corporates telling their banks that they need to know those standards, that is the key to answering question number one of how much I spend.
And then you make this important distinction between commoditization, efficiency, and relationships. How are we going to manage this if you got complete and full knowledge of the costs? Why do you need to manage the relationship?
Well, we often tend to go down two different paths. We'll either go after individual services, and we'll try to get our price reduced on the commodity that is that service, electronic funds transfers or something, whatever we concentrate on. And we focus at the very detail level. What we miss when that's our only approach is we're not optimizing what we're doing. We're missing the fact that the bank views a corporate in a far broader point of view than one service or another. And we need to view the banks in the same way. We may have debt obligations with them. We may have a whole variety of things, and we need to manage the entire relationship rather than just benchmarking the individual line items or cutting out a few pennies out of every service item.
So how do you do that? Do you just manage the relationship by share of wallet? That has always seemed to me rather crude.
In today's world, it's probably the best we can do. I think first and foremost, you need a system of some sort that is able to take the massive amount of data that comes in on the bills from banks, one of the richest forms of data you have, and put it in an ordered function or fashion that I can then go in and review, not only benchmark, but see the entire, what is my wallet, right? We try to do wallet share analysis without knowing what our wallet looks like.
Coming back to the standards, there's various suppliers who say they're ISO 20022 compliant, they're compliant with local standards, and they're also receiving information that's just non-standard, period. Is it possible to bring all those together to really understand the costs of the bank relationship?
I really do think it is very possible. I view this as the role of the vendors in this world. By its very nature, ISO 20022 has versioning to it, which means a bank deciding on a version and a corporate deciding on a version, they're liable to have misses in there. I think that's why it's so important that we have systems out there that are able to take the standard data in whatever version it might be and use it to give the treasury user a consistent view so that they don't have to worry about versioning or any of the complexities. They simply look at it and say, here's a statement that I got from one of my banks.
Right, and so you can understand the full costs.
Right.
Once you understand it, what are the sort of benefits in terms of cost saving and managing the relationship?
Well, first and foremost, it gives me an idea of knowing what I'm really spending. And once I know what I'm spending and I know what I'm spending in each of my banks, then I can start doing some real wallet share modeling so that I can take my fees and I can get them and optimize them in such a way that I'm not cheating the bank's not cheating me, and cheating is probably not the right word, but that we're getting the most benefit out of the whole relationship. And it looks at everything, not just the services I'm buying, but the value of my balances, the value of any returns I might get on those balances, the value of the debt portfolio they may have a part of. It is far broader than we tend to take it. Once I have that in place, I'm in a far better position to negotiate the fees and get the right mix of concession where I need it and a fair, equitable relationship.
Is that done typically on a per corporate basis? So you build a model for one corporate, which will be different from another model at another corporate?
The place I find that it has the most coincidence is by industry. So for the most part, once you know what an insurance company looks like, for instance, most insurance companies are going to be fairly similar. So there is some modeling then that can be shared, or at least some ideas that can be shared, and then even some comparisons that can be done, one insurance company against another insurance company, for some benchmarking types of things.
Thank you. This is really critical to the efficiency of not only eBAM, but the efficiency of cash and treasury management in general, and the corporate's relationship with their banks. Thank you very much. Most interesting.
Thank you.